Alrighty, Wednesday, May 29th, another relatively slow session here today. Let's take a look at NQ for a quick session recap. We come into the session looking at what appears to be a fairly large gap down following yesterday's rally into the close. So we're talking about into the regular trading hours open, NQ is down about 1%. Now, with a big gap down like this, very similar to with a big gap up, I use what I like to call gap rules. And essentially what I like to do, if I can, is analyze how price is trading versus one primary reference point and then see how that gap is treated. Because a lot of times when you have a gap of this magnitude, you'll see an attempt for that gap to be filled. Now, while the gap was not completely filled today, definitely resulted in a rally off of the open, which provided some really strong opportunities. So price was poised to open near that 18,750 downside level of interest that we've been watching for a few weeks now within this intermediate term range. That gave us a really strong reference point to kind of get a sense of who's going to take control early in the session, right? So we just want to see, is 750 going to be holding? Is that 18,750 area going to be holding? The answer is yes. You can see how strong this initial 5-minute bar is right up into that 18K level. Test the prior day low, you get a bit of a pullback, and then the rally continues, marking a high up into essentially the prior day value area low, which is not uncommon to see. That's always going to be a significant reference point for today's session. So that marks the session high, and then price just settles into a nice intraday range with prior day low serving as that area of intraday support, which aligned nicely with our intraday 50% fib retracement. So this type of action, a lot of traders will call this chop. I view this as a tradable range. You can get some really good opportunities if you are positioned correctly with a strong reference point or a strong level of interest that also has confluence of either VWAP or some type of fib retracement or some other level. And so we see multiple attempts versus that prior day low to try some long trades. You got about 5 or 6 of them here working pretty nicely, trading up into that intraday value area high, intraday resistance right up through there. So it just gets treated like a tradable range. Now, as far as what we'll be looking at for tomorrow with GDP, we have GDP tomorrow and then NFP on Friday. So we do have 2 sessions, which should bring some volatility. What I'm primarily going to be focused on, especially with price continuing to pull back a bit here versus this afternoon range, we want to see how is price going to be traded versus these same reference points. 18,800 or that 18,750 area. Now, in the intermediate term, meaning what you can currently see on the screen, what we have is a pretty clear range here. In the more near term, right, price, the structure, kind of showing a bit of a downtrend here, or at least the makings of a very, very short time frame downtrend. So I'll be keeping an eye on how this near-term structure develops. Just looking at, if I flip to the 15-minute, just kind of taking a more intermediate, or rather a shorter term view over the past couple of days, and really getting a sense of how price continues to develop within this structure here. We do have a series of lower highs that is starting to build out, and so how price responds to this 18,750 area is going to continue to be significant. So that'll be the main watch into GDP tomorrow. If we have some type of big overnight move, share an update, of course, in the pre-market prep live stream. But ideally, we can get some type of volatility with GDP, and then with PCE, potentially a break of this range. So those are a couple things to look forward to here in the coming days. NQ, just to reiterate, 18,750 or 18,800 going to be those main levels of interest for tomorrow's session. Now, ES, a little bit of a different story. What we can see here on ES is that price is trading down into that near-term area of support. Now look at the contrast between NQ. NQ support is down into 630, so quite a ways off of that near-term range support, which was established following Wednesday, that May 15th rally, right? So that's definitely a key day that remains on watch. Now, ES, we came into the sesh wanting to see how price was going to trade versus that 52.85. ES definitely trading much slower today and recently, generally speaking, versus NQ. We have seen much better opportunities in NQ. So if you're strictly focused on ES, you may want to shift some focus over to NQ because we're definitely seeing great opportunities in NQ and kind of some subpar action within ES here. But anyway, we come into the sesh wanting to see how price is going to respond versus that 52.85 or that 52.70. And these are significant reference points, significant areas of support because that is Thursday's low. This is the most important session, at least in the intermediate term view. So the low point of Thursday as well as the high point of Thursday remain incredibly significant for this current structure. Remember, we're treating Thursday's session as kind of a range expansion type of day and continuing to call this and trade this as a near-term range. Now, price, if it is testing key area of support, did not show much upside follow-through, right? Don't really have a big bounce here off of that 52.85. Pretty much could not even get, from the looks of it, back up and through that prior day low. So prior day low really keeping a ceiling on ES today. Again, big divergence from what we saw in NQ. NQ offering much stronger relative strength, which is important depending on how you like to trade. And so ES settles into that range day. You can trade some decent opportunities here, definitely, if you are, expecting that intraday range, just looking at that 52.85 reference point up into prior day low. So long, right? Sell, long, sell. Very simple stuff. Now, as far as tomorrow, again, into GDP, we want to see what's the reaction going to be versus this key area of support down through here. Right through here is a very important zone that buyers need to be defending. Let's take a look at the daily chart as well. Let this rescale. Looking like, at least to me, a bit of distribution here, right? So we want to be cautious. Keep an eye on ES, even if you are focused on NQ right now. If ES breaks lower, you want to be real cautious with any type of index plays, especially to the long side. So this continues to be a key area of support. It's not broken yet, right? So don't mistake that as like super bearish commentary. Price is currently trading down into support, but just based on the shape of this daily, want to continue to keep a close eye on this. Be watching the reaction very closely here into tomorrow with GDP. That's the 52.85 by 52.70 essentially. Key zone. And remember, if you look back on the daily chart, this area has been significant in months prior, right? Back in April. So be watching that pretty closely. We do have, interestingly enough, what I just noticed is we do have this week's volume point of control down here with today's session. That was 52.87. So if this is accumulation, we should be expecting a bounce. Essentially for tomorrow, what you can do to keep it pretty simple is just watch how price trades versus today's range, with a special emphasis on how these higher time frames, your 30-minute, maybe even your 60-minute, continue to develop versus this key area of support. Initially off the open, we do have that hourly time frame hammer. Holds pretty nicely, right? But ideally, what you want to see is buyers continuing to show follow through up and through that prior day low. And that is just not the case for today. So we'll see how it shakes out. No crystal ball here or anything like that. I'm just watching to see how price responds versus those levels of interest. Hope you guys had a great day, profitable session. If you have any questions, feel free to shoot me a DM in the Traders Think Tank. Otherwise, I'll see you tomorrow morning. Later.